Hi, I'm Bob Keiser, Vice President with the Global Markets Intelligence Unit at S&P Capital IQ. Thanks for previewing this week's edition of the Lookout Report. At long last, the Federal Reserve appears set to raise interest rates and commence the normalization of U.S. monetary policy. The much stronger than expected October employment report and Services Purchasing Manager Index report have given the Fed, the data-dependent Fed, a green light to increase the overnight Fed fund interest rate for the first time in nearly a decade. Core consumer price inflation of 1.9% at the end of September also appears to be increasing confidence within the Fed that core inflation will eventually return to and stabilize near the stated 2% objective. If the FOMC is indeed within weeks of hiking interest rates and the commencement of the first tightening cycle seen in a decade, the question immediately arises: how quickly and how far will the Fed further tighten monetary policy in 2016? We believe, as apparently do most investors, that the Fed will prefer to adjust policy very slowly at an extremely measured pace in the year ahead. Careful consideration must be given to what effects the first tightening seen in 10 years will have on the term structure of market-controlled interest rates and then U.S. economic activity. Back in the spring of 2013, when the Fed foreshadowed the end of QE3, which triggered what has now become known as the Taper Tantrum, the 10-year Treasury note yield quickly increased from 1.66% at the beginning of May to over 3% at year-end 2013. The Taper Tantrum also drove 30-year mortgage interest rates significantly higher, sending such a chill through the housing market that it took up to 2 years for the housing market to recover from the aftershocks of the tantrum and rising bond market yields. With this and other factors in mind, we believe that the Fed will prefer to be nearly as cautious about snugging monetary policy in 2016 as they have been in 2015 while building a consensus for the appropriate timing for the liftoff of policy normalization. For further thoughts on this topic, plus additional cross-asset insights from McGraw-Hill financial thought leaders, see this week's Lookout Report titled "The Taper Tantrum of 2013 Suggests that the Fed Will Cautiously Normalize Policy in the Coming Year." Until next time, I'm Bob Keiser with S&P Capital IQ.